Samamurthy sir, and past President Iswaran sir, and GC members Dahima sir, Ramana Reddy Garu, Ajay, Someshwar, and Kabra sir, Satish, whomever I'm able to see, PS Chiranjeevi. See all the participants, very good afternoon to all of you. I welcome to this ninth speaker meet of the financial year 25-26. And very important topic, as Secretary mentioned, because the new act has been become implemental from 1st April onwards, and TDS is one of the important topic for anyone, for me, for auditor, for client, for anyone, because this has a lot of repercussions if there is some non-compliance with respect to TDS. If there is a due of some income tax, say in terms of volume, they may see, but in terms of TDS, even if 1,000 rupees deviation, there are cases that I have seen, it went for prosecution, then compounding. So that is the seriousness of TDS. So we have big responsibility on our shoulders to educate our client in terms of TDS, and especially with this new provision of partnership firm coming into TDS provisions with respect to remuneration. So it is going to enhance our, I mean to say, professional value also, wherein now we get the number also will be increased because majority of the partnership firms, if they're not falling in other TDS matters, definitely they will be taking remuneration, so they will be falling under this provision. So we will have some clientele going up in terms of TDS. So thanks for all the cooperation till now, and we have 2 more months, of course, 2 months, 10 days. And I hope all of you have completed your bank audit successfully. Now, that's the reason we are back with this topic. Maybe soon we'll have physical session also in May month. We have some plans. May we'll have 1 or 2 programs, physical meets. So things are going on well, and all the best. And with respect to TDS, my dear friend, let me tell Mr. Perfect Speaker, Pankaj Sanjay T is Mr. Perfect of our tax bar. So I'm sure you are going to benefit out of this session, and he's going to clear you whatever the doubts you have. And this is going to benefit all of you. And one more specialty aspect is chairman of today's session is Samamurthy sir. When Samamurthy sir is around, I'm sure the humor, the happiness, and everything will be there. So the session is going to be very good. So all the best to Pankajji. So thank you very much for accepting this, and thank you Samamurthy sir for giving that time. So with this brief, and also anyhow we have our task master Ramdevji. Anytime, anywhere, if there is some issue problem, he will be coming to our rescue. Thank you Ramdev sir for your time, and thank you all. But stay till end of your session and see that your all questions are clarified. I think because few of office members also were present, so request all of you to enjoy the session. Thank you very much. Over to Secretary sir.
Thank you, President sir. Before proceeding to the session, I would request our advisor, CA Ramdev Bhutra ji, to address the gathering.
Thank you, Ashish. Am I audible?
Yes, sir.
Yes.
So first, let me congratulate the entire team of TAPTBA for timely conduct of this program. As President sir, you rightly said, we have many stalwarts in our association who can discuss, chalk out strategy, and guide us on various topics. So this is one of the way to learn. I am thankful to the entire team for choosing Pankaj on this very important and critical topic. One more thing, President sir, you have rightly said that 194T is the section under Income Tax Act 1961, which is First time it is being effective from previous year 25-26, relating to TDS on interest and remuneration to partners. And if you remember, it is very difficult to work out remuneration and TDS for the partners before completing the books, because majority of the cases remuneration is linked to the determination of the profit, percentage of profit, as per section 40B of 1961 Act. Anyhow, we have to plan it, and I hope Pankaj would guide us how to compute that remuneration and interest based on the profit of the partnership firm in advance, so that it is very near to that. He will guide us on that, one thing. And another thing, all these provisions which we are going to discuss are relating to, I think, two acts, 1961 and 2025. In 2025, only limited one or two sections are there relating to TDS. Entire thing is given in a chart table. Earlier, we used to remember very important this thing. Again, it will take a lot of time for us to remember which table, which serial number in the table will be applicable for this particular transaction. Anyhow, it will help us. And I think we should circulate a table chart to all the members clearing this, so that it will be like ready referencer. I urge President Sir to take this task. Any of our directories and printing, if possible, design that, graph that, and present it. It is my humble request to the President Sir. And one more thing important, sir, regarding this system of the tax year and previous year assessment year. It is very confusing. So for this year, we should be very careful. What we are doing till May is relating to previous year 25-26. The provisions of 1961 Act will apply. After that, of course, in the current year 26-27, which is financial year as well as tax year, provisions of 2025 Act will apply. Recently, we have attended, I think Sama Murthy was also present there. A awareness campaign was organized by the Hyderabad branch of ICI, wherein department has presented PPT. It was very fantastic, and I urge President to approach them also. It is very helpful for us. With these few words, I take rest. Thank you.
Thank you, sir. Thank you, Ramdevji. So now we would, before going to technical session, I will hand over the session to and welcome and hand over the session to the session chairman, CA P. Samamurthy Garu. And I request him to take over from here onwards and also introduce our speaker, CA Pankaj Sancheti.
Thank you, Secretary Sir. Before I start as session chairman, I request a small request to all the participants here to kindly mute your speakers so that it will not disturb the rhythm of the speak. Because suddenly something pops up, the flow of the speaker will be disturbed. And also the concentration of the other people also will be disturbed. So for the sake of the speaker's fluency, as also not disturbing the concentration of others, I request all of you to kindly ensure that you have muted yourselves. If you have anything, raise a hand and we will stop and clarify. But my request is you note down your queries, let him present first of all what he wants to give. And if that query is not answered in his presentation, then you put your question beforehand. బిఫోర్ అమ్మ సర్వ్ చేసే లోపల ఆమె చేతిలోంచి గుంజుకునే ప్రయత్నం చేయకండి. అమ్మ ఏం వండింది తెలుసుకోండి, అన్ని వడ్డించేటట్టు చూడండి, లేకపోతే లేనిది అడగండి అట్లా. సో మై రిక్వెస్ట్ ఈస్ యూ కీప్ యువర్ క్వెరీస్ టిల్ ది లాస్ట్ మూమెంట్. After this presentation is over, we will give ample time for everybody to ask questions so that he will clarify whatever is not known. And this will not be exhaustive. This presentation is only what you get is just throwing light on the changed provisions. Now we have to be aware how it will show, because TDS and TCS have become important part of your practice. That one should understand. Why? Because income tax return is yearly once, but TDS, TCS every month. It is a monthly affair. And when it is due, as when at the date of payment, at the time of credit, all these things he will be telling. If you don't comply with that, what will be the impact? Interest and penalties, that also he will explain. And there are so many stages in this TDS. First of all, the amount should be liable, then TDS is to be deducted, it should be paid, then those things should be filed, then afterwards the form should be downloaded and issued to the concerned party. All the stages will be there. Everything is important. Now department is tracking whether you are downloading or not. That is also important. And if you are not doing, if you are missing anything of this, then penalties are there. What are those penalties? Pankaj will tell. And if you have done some mistake, correction statements is always there. But this correction also they have given limitation now. Previously there was no limitation. Now they have given limitation also. And time barring also has become. So all these things now it is there. Now arises a need to know the effective. And one more thing, they are proposing so many changes in the budget. And you should be very careful about the effective dates. Some things they are telling from April, some things they are telling from October, some things they are telling from next year onwards. So all these things you should take note of. And who has to comply? It is the client who has to comply, but client is not doing. Accountants are not aware. They are not at all interested. It is the auditor who has to make them understand. So we should be first of all aware. We should make our staff aware. Then subsequently we should make the client aware, and we should ensure regularly whether they are doing it or not. So now this is an opportunity for us to know about the changes in the limits, rates, changes in the act, sections, forms, because now we have to live at least for the next 10 years, 2 acts. You should know 1961 and as also 2025. So you should carry 2 books, 2 set of books. So all these things, Pankaj will throw light so that you will hear him first. Then if any doubts are there, we will ask him and he will be ready to explain. Now I request Pankaj to give his lecture after being introduced by the secretary. Now I request secretary sir to kindly introduce Pankaj Sancheti.
It is my privilege to introduce our today's speaker, CA Pankaj Sancheti. He's a chartered accountant with over 20 years of experience in transfer pricing, international taxation, and corporate tax advisory. He has held leadership roles at Deloitte, EY, and PwC in Chennai. He has advised a broad range of Indian and multinational clients on inbound and outbound tax structuring, transfer price planning and documentation, and dispute resolutions. Pankaj regularly represents clients before tax authorities, APA authorities, and appellate forums. He is frequent speaker at professional forums and a regular contributor to tax publications. With this brief, I now welcome CA Pankaj Sancheti to address the gathering.
Please unmute. Please unmute. Please unmute.
Sorry. Thank you, Secretary sir. Thank you, Chairman sir. Thank you all members who have joined. I will be sharing the screen. Ashish, you will have to be my sounding board, and let me know if I mean it is clear or not.
Sure, sure. Yeah, it's clear.
Just hide. Yeah.
Yeah.
Yeah. So good afternoon, respected members of the tax bar, seniors, colleagues, and friends, all who have joined. Let me begin with a simple thought. Everyone in this room has grown up professionally with the Income Tax Act. I mean, at least I have, and most of us would have. So for many of us, the section numbers themselves became the language. I mean, 192 meant salaries, 194C meant contractors, 194J professional services, 195 international payments. Now imagine the entire language being rewritten. So this is what the Income Tax Act 2025 represents. and now it is a reality. We have been hearing for many years now that there's a new act going to come. It was earlier supposed to be called the Direct Tax Code. Now it has come as an Income Tax Act itself, 2025. How much? So, but here is an important point I want to note. I have read the act, gone through the act, scanned through the act, everything. It is not a revolution in the tax policy. It is definitely a revolution in how the law has structured, read, and applied, but not really, I would say, not really a key substantial change or something earth-shattering. It's not. It is reorganized, redrafted, but policy-wise, substantially, it remains the same. I'm just moving with the slides one by one, and so just for the timelines, February 2025 was the income tax bill presented in the parliament, and then in August, bill was passed by the parliament, and effective 1st April 2026, and now the income tax rules also have been notified, and it has come into force. So there is a transition period which we are in currently, as the chairman sir has said. The transition period may continue up to 10 years, but this year is a very crucial year, and at least first 2 quarters are very, very crucial, because you will be doing some of the filings still in the old forms. Some of the provisions you will still be referring to the old provisions. And then maybe from the second quarter onwards, you will be moving to the new act, new rules, new forms. And the CBDT has clarified in their FAQ on the new act that the systems, the portal will enable both the forms for this year. So at least this year, even if you have missed something for the earlier, you will get a chance to maybe correct it, rectify it. But yeah, as time passes, we will have lesser of things. So many times the provision of the law allows, but the system itself does not allow. We have seen that in the past, because there is no enabling, and it is digital now all. So if there are no, the forms are not functioning or it is not enabled, then irrespective of what the act says, it becomes very difficult to comply. So what has really changed? What has really changed? What is new in the new Income Tax Act? So, as I said, it is nothing earth-shattering. The base law remains the same. The policy remains the same. The architecture has changed. So how it is read, how it is applied, that has changed. So in a single line, if I have to say, the DNA remains the same. The architecture has changed. So that's in substance what the new act is all about. Now the CBDT FAQ, which came after the rules were notified, gives some statistics. I've just summarized those statistics here, and you could look at it. The act size in terms of words, chapters, sections have almost halved. But if you look at the tables have 3 times increased. So there were 18 tables in the 1961 Act. Now there are 57 tables. So there is a significant reduction in the text, but the tables in the format, there is a change. So I thought I'll just touch upon these facts before we jump into TDS specifically. Because the other way to look at this is the old act, because we have almost 6-7 decades old act. It is like our old city, right? So over a period, a lot of extensions have come, amendments have come, provisos have come, explanations have come, and now we are moving to the new act, which is something like our new part of the city. So it is like our high-tech city, which is maybe more cleaner, more structured. We may have complaints on the new part of the city also. So there are certain shortcomings, I would say, in the new act also. This act was passed in August 2025. And in the Finance Act 2026, which came, there were almost 100 amendments. Now, this this can be said that it is expected, it is a new law, it has to be read, feedback has to become, it has to be corrected. But in today's world, if so many corrections have to be done, then it is technically not the right thing, I would say. Even the rules which were notified just in this month, I mean, within 15 days, we have 15-20 days, we have an other CBDT circular which has come up with so many corrections in the rules. So it is very strange that in the age of AI, we are having referencing errors. We are having textual errors, which could have easily been corrected and bought. So that's the way it is, and we will have to live with it. And in fact, in these provisions also, as we read it, I have found that there are certain shortcomings. Hopefully, the government would rectify those in the future. So, yeah, so this is something which Ramdev sir already touched, and now we don't have to live with the previous year assessment year, and then I mean, now everything is unified to be a tax year. So, I mean, everyone would have faced this problem. I mean, I have faced it a number of times. I mean, though we are had advised on number of years over looking at the act, but always when something is there, when this provision of the act comes into effect on 1st April 2026, we are always confused whether it is for the financial year 26-27 or financial year 24-25. At least the simple thing we wouldn't have to worry going forward, because they have unified everything as a tax year. Now, as I said, it is more structured. In the old act, right, it was, I mean, the same provision would be referred in different section, or same subject would be referred in different sections. It would be, I mean, and then it for different sections and different places, and there would be a lot of cross-referencing there. So I'm not saying that the new act doesn't have cross-referencing, that is there, but substantially reduced. So that is how the new act is there. And now coming to the subject of today, that what is there in the TDS. And as Sambamurthy sir said, TDS is something we have to live on a monthly basis. We cannot take a chance that, okay, this act has come effective now, only the assessments will start next year or the returns filings will start next year, so we will look at it later. No, TDS has to be done on a monthly basis, and these impact our daily transactions. So the good thing is there is a consolidation. We had almost 30 plus sections on TDS earlier. Now we will, I mean, as we go forward, we will look at it, how these have been consolidated. There is table-based drafting. I mean, earlier also, though the Act provided all the rates and other things, we always used to refer to the reckoner for getting in a tabular format what is the rates or for the different transactions on which TDS is applicable. So I think the table which was earlier there in the reckoner for us now has come in the Act. But again, as we go forward, you will look at it. It is not at all at one place. I think still some reckoner would be required so that to look at it all at one places, and we will understand why this is still there as we go. But the good thing is everything has come at one place, and there is a lot of digital orientation. The forms, the systems, the workflow all have changed in the new Act, and more aligned to a digital or online reporting and compliance. Now, this is Chapter 19, Collection and Recovery of Tax, where TDS is located, and the chapter has different parts. Now, what we will be focusing on is Part B, which is Deduction and Collection at Source, which is Section 392 to 492. And we will go through these sections each to understand what is there in those sections. Yeah. So, yeah, this slide deck summarizes the section which is there under the new Act and gives the corresponding old sections. So as there is consolidation, I mean, now we have in some 11 sections, and earlier we had some 30 plus sections, subsections. So everything has been consolidated. So 392 section is on salary and accumulated balances due to an employee. So this was salary. They have continued to kept in a separate section, which corresponds to the 192 and 192A of the old Act. Now, tax to be deducted at source, section 393. Now, 393, we really cannot look at as a section. It is the engine of TDS provisions. So it is where all the TDS rates, all aspects related to TDS are covered now. Now it consolidates number of sections 193, 194, 194, lot of subsections A to T, 195, 195A. And so that's why we will go into this section in much more detail. 394 is on collection of tax at source, which corresponds to 206C of the old Act. 395 is on certificates, lower withholding, nil withholding certificates, which corresponds to 195, 197, 203, and 206C of the old Act. Tax deduction is income received, 396 provides that. 397 provides on the compliance and reporting, which were again spread across various sections earlier. And then the other provisions, which is consequences of failure to deduct or pay, or to collect or pay. So that all also continues. Processing 399. This is your tax returns getting processed, the TDS returns. 400 provides the power of the central government to relax provisions of this chapter. 401 bar against direct demand on the SSE, where deductor has already deducted the tax. And 402 lists down the different definitions or interpretations of the of this part of the chapter 19. So this is in summary the sections which are related to TDS provisions under section 392. Now there is, if you look at it, then there is chapter C, which is on advance payment of tax. Chapter D, part D is on collection and recovery. Part E and Part F, interest chargeable in certain cases and levy of fees in certain cases. So all these provisions were there in the earlier Act, they continue to be in the new Act. So important to note that the government in this budget has made some amendments which are amendments in the new Act. But there were some amendments which were made in the 2025 Finance Act. At that moment of time, which government made the amendments to the 1961 Act, where to align the 1961 Act with the 2025 bill, which was already there at that moment of time. So with these two acts, I mean, with last 2025 Finance Act itself, tried to get the 1961 Act aligned to the 2025 Act by making the amendments. And we will look at what those amendments are there and what the new amendments have come in this Finance Act also. And the rules, again, for relating to TDS are there in 203 to 221 of the income tax rules 2026. We will look at what all those rules are there and also what all forms are there. Now, here the important point to be noted is when you, what could be the opening lens of when you look at this? What are the new rates? No, it should not be what are the new rates because the rates continue to be the same. The important opening point when you look at this new act is what is the new grammar? Because there is no provisions as of now, there are no explanations. So what is the new grammar should be the opening lens, how you have to look at it. So now we'll go in little detail on what are the subsections of the three main important sections of the TDS. as I said, salary has been kept separate. So 392 is the salary section, and where it is provided that salary has to be deducted on the average rate on the estimated income. This is unchanged. It was earlier there. And so that is on subsection 1. Subsection 2 provides on employer option to pay tax on non-monetary perquisites without deduction. So this is there. I mean, these is not added to the income, so that has been provided. Eligible startups, ESOPs. So ESOPs, as you know, they are non-cash perquisites, and this there is a timing difference of when the ESOPs are, because the taxation point is at the time of when they are exercised, but there is a leeway given that they can offer to this when it is really sold in the next 5 years. So that is provided here for eligible startups. This is only for eligible startups, not for everyone. Subsection 4 and 5 is on proof of claims, what documentation the employee has to give, its statement on TDS, what the company has to file, and it also provides for adjustments for deficiencies in TDS deduction. So if there is some less or more TDS deducted in a month and during the year, you can correct it. 6 and 7 is on recognized previous funds. The TDS, which is accumulated balance, is includable in the income, and accordingly TDS has to be deducted. And 8 provides the conversion rate for salary payable in foreign currency. And this provides that it should be as prescribed, and it is prescribed in the rules. So this is section 392. Moving ahead, I mean, we are not taking a break now, but we will definitely take a break. So keep your questions. If you have any views, keep it on hold, and then you can raise your hand and share. Now, as I said, 393 is the heart of TDS law. This section consolidates number of sections of the earlier act at one place, and it's in a tabular format. So subsection 1 provides for TDS provisions on payment to residents. The table provides who should be the payer, who should be the payee, and what should be the rate it has to be deducted, and what are the thresholds. So all these aspects in respect to a payment to a resident is provided here. Now, subsection 2 is into payment to a non-resident. Subsection 3 is payment to any person, which could include resident, non-resident. And subsection 4 is for no TDS, I mean, where TDS does not apply. That is again given in a tabular form. Subsection 5 provides TDS exemption to payments to government. Subsection 6 and 7, these are for declaration of no TDS. Again, it's provided in a table format. Subsection 8 is interest payment by an offshore banking unit. It provides that there will be no TDS. Again, 9 is for an NPS test, which again no TDS. 10 provides for grossing up, which is where TDS is not deducted, but the net of payments is agreed with the recipient, and then it has to be crossed up. 11 is of deemed credit. In case you account any payment, provide for any payment, even if it is in a suspense account or any other account, then it will be considered as a deemed credit, and TDS provisions will apply. Just pausing here for a minute, so you can have a look at the subsections of 393. Now, coming to here, you will have to note that in most of the places, the payment is as it was there in the past. When the payments are made by any firm or any enterprise, any person, it is made, except for individuals and HUF, if they have business income above 1 crore, then in the prior year, then TDS provisions apply to them. So there are two aspects here. Again, there is a designated provision. So one of the provisions is for a designated person. So when you look at the table, maybe I can share it on screen also. when you look at a table, so in the table provisions, what's provided is who should be the payee, who should be the payer. Now, in this case, I mean, why this designated person is very important, because in one of the places, when the payee is a designated person, payments for contractors. So in the payments for contractors, when the payment is there, all this have been, I mean, a designated person includes a central government, state government, local authority, because a lot of these things do not come as a company. So they are also included, including any firm. So designated person is defined in a larger manner than what is there for a specified person. So most of the other provisions are there for designated specified persons, but for contractual payments, that is 194C of the old Act, now it is basically serial number 6 of the table for payments to residents. Now, specified payment, a specified person continues. So all these definitions are provided in 402 section. It is any person not being an individual HF or HF, and if an individual and HF, then if the sales in the prior year exceeds 1 crore, or if it is business income, if it is professional income, it exceeds 50 lakhs. So they are liable to do the TDS. Now, if you look at it, at some places, the tax rate has not been provided in the Act now. It says it has to be deducted at rates in force. I mean, take the example for commission or brokerage. Now, that's the first in serial number 1 of table for payment to residents. So the rates in force means the rates or rate specified in the Finance Act for the relevant year. So government has still kept that for certain payments, the flexibility or to prescribe the rates through the Finance Act on a yearly basis. But for most of the other transactions, the rates have been provided with the threshold limits. Now look at, as I said, there are a lot of amendments which have come in the Finance Act 2026 for this Act itself. So even before the Act really got into effect, was implemented, the amendments have already come into. So we'll just scan through what are these amendments. And obviously the amendment has been also been made in the 1961 Act also, so that there is consistency. So starting with TDS on compensation awarded by motor vehicles claims tribunal to an individual. So if there is an interest provided, this is a consequential amendment, because that interest has provided to be exempt. So there should not be any TDS, so that has been done. Now, there is an amendment in 393(6) to permit investors to file declarations with depositories for non-deduction of tax. So as you all know that you could have provided 15G, 15H if your income is not taxable with the details, and the security on which you have provided, the entity would not deduct the tax. Now you have an option of, instead of doing singular filing, do the filing with the depository, and the depository will accordingly communicate or inform the respective companies on which interest or dividends is being paid. So this is a kind of a safeguard for employees, safeguard for individuals, so that they don't have to make multiple declarations. Now 395, this is a very important change. Now there is an option which is being given to people to make an application for a nil or lower TDS securities with the prescribed tax authorities online. So the option which was there earlier, as for the earlier you had to make to an assessing officer, so that continues. But there is an additional option which is given, that you can make an online application for lower or nil TDS certificate. And this is parallel to the assessing officer application, which you can still make. So that's a good thing, I think. And I mean, it's not yet enabled, but yeah, this is a very good change, and it will reduce the timelines which or efforts which goes in getting a nil or a lower withholding certificate. 397 TAN requirement for buying immovable property from a non-residence, particularly for individuals and HUF, that has been removed. So earlier there was a requirement when you buy a property from a non-resident to get a TAN, so that has been removed. Now, definition of work has been changed to include the supply of manpower now. So there was always this confusion whether it falls under 194C or 194J. So now it has been clarified that it will, or maybe prospectively it will get included under 194C, the old 194C. So now if you look at it, you don't have to remember the sections. I mean, the sections is basically everything is 393. What you have to remember is in the table of payment to residents which serial number, in the payment for to non-residents which serial number. So that is what you will have to remember going forward. And the authorized person definition has been changed. Now this is section 400. This is again a very, very significant change which has happened in this Finance Act. CBDT guidelines for removing difficulty are now binding on the tax authorities and deductors. Now, previously, CBDT guidelines were always binding only on the tax authorities. It was not binding on the taxpayers. But now the Act provides that CBDT guidelines are binding on the tax authorities and deductors. So this, I think, will definitely get challenged whenever there is some provision which is guidelines which comes and which is not binding on, which is not favorable to the taxpayers. Section 399. TDS TTS statement processing consequent to change in fee provisions. This is again a very normal change. And there has been a uniform rate. Now, I think TCS has been now changed to completely to a 2% rate. Earlier, there was 1%, 2%, 5%, 10%. Now, I think every 20%, not 10%, 20%. Now, it has become a 2% for, I think, almost there are 9 transactions provided. For 8 of them, it is 2%, and there is 1% in one other transaction. Now, there has been amendments which have come in 2025 Act, which are different from the 1961 Act. So here I have listed out those, and some are routine amendments, but some are very significant. Like the first one is for life insurance. Earlier, there was a threshold of life insurance commission only if it is above 1 lakh, the TDS would be applicable. Now there is no threshold. But very important to note that professional services, the definition of professional services now includes advertisement services. So now advertisement services for which previously all TDS used to happen at 2% and 194C now will happen under 190, I mean the old 194J and the new one is 393. So it will happen as at a higher rate than the earlier. The rent. Now rent is defined at one place only. Previously there was section 194 IA, I and IB. So IB rent was only for, only for land and buildings. But now there is rent is defined only at one place. So it is the same rent definition for all provisions. So when you have this payments of rent by individuals, as you know, individuals are required to deduct TDS when they make a rent of more than 50,000 per month. So now the thing is the rent includes rent could be for furniture, fixtures. So you really will not have that flexibility now of breaking up the rent into 2 components, which earlier was possible to overcome this compliance. Now, on the compulsory acquisition, previously the law provides that TDS was subject only at the time of payment, but now because it has been made consistent, and you will find 2-3 other places also this has an implication. The tax has to be deducted at the time of credit or payment, whichever is earlier. So for certain things earlier it was only on payment, like acquisition of land and compulsory acquisition. It was only at the time of payment. Now it is at the time of credit. Lower TDS, again, there were earlier restrictions. Some sections specifically provided, then only you could make the lower TDS certificate. Now it is for any income on which TDS is there. It has been extended. Yeah, there is this processing. On processing, there is a reference. No, so there was this old provisions. If the TDS is filed by some other authority, there was a scheme for provided that for processing of that. So there's nothing there in the new act. So maybe it is by oversight, or it may come later on. Motor vehicles. Again, this is also earlier at the time of getting the amount, the TDS, TCS had to be done. Now it is only at the time of invoice it was done. Now it is at the time of collection. So if advance is collected, that time also the TCS has to be collected. Now, time limit for correction. This is a very significant change. Earlier, the Act provided for 6 years. I mean, in the past, the Act did not provide anything. Then they introduced 6 years for correction. Now it has been reduced to 2 years. So any corrections which has to be done, it is 2 years. Within 2 years only, we will have to do it. Yeah, and then on the cash withdrawal from banks also, it applies to the entire threshold limit. Earlier, the understanding was up to the threshold amount, TDS need not be there. Only the amount above the threshold TDS would be there. Now it will apply to the whole amount. So that has been clarified. Now, how does this practically impact? So this I've tried to summarize here how it practically impacts. And one important thing to note here is that earlier, if you look at maybe section 194I, so it would provide TDS on rent. It would also provide the threshold. It would also provide the provisos or explanations or clauses when TDS is not to be deducted. So all at one places. Now it is not that way. And that's why I said that you may still have to refer to a reckoner to see everything at one place. Because the table which provides the rate and the threshold, you will have to read that table along with subsection 4 table, which provides for exemption for TDS on certain thresholds. The classic example, what I saw, is for the virtual digital assets. Now, any person purchasing in subsection 3, the table provides that anyone buying a virtual digital assets has to do a TDS for 1%. But if I go to the table in 4, it says that if the amount, the purchase amount is less than 50,000, then TDS will not apply. So you will have to read the table. You will have to read the notes below the table. And then you will have to read the table where there no TDS is there, or some conditions for no TDS are there. So you'll have to read that table also. So you will have to read now holistically all the 3 sections so that you get it. And that's why I think there is a need of again summarizing this all, because there is no cross-referencing. So if I look at it, if I say for VDA, when I'm looking at it, in 3, where TDS is applicable by any person buying this thing, there's no cross-referencing to say that in 4 there are certain exemption provided for VDA. Even the notes below, which are there below the table, do not really have a cross-referencing there. So you will have to look at it and look at it completely. Then only you will be you will not miss out anything. So it is good that it is in a table format, but these shortcomings are there. Because there is no cross-referencing, you will have to read it fully, those 2-3 sections, and then only you will be able to get to the right conclusion. So this is the practical implications, which I said you will have to read it holistically. Now you will, because there is no withholding, this is specifically no withholding is particularly for payments to banking, cooperative, and when they are making the payment. So they will obviously have to now update how they look at it. And the changes have to be done in the system because, as we said, our language has become with the sections in the old. Now it is no longer the sections. So you will have to update your systems from, if you have already, because I know at companies I've seen ERPs where when a payment is made or any entry is being made, a question pops up whether this is applicable to TDS is applicable or not. And when I say yes, then it again a second pop-up comes with the section under which is there. So companies would have to change those ERPs or softwares where sections is mentioned to really. So I'm not sure how is everyone doing. Not checked it up, but I think now the section will not come. So serial number would be coming. So maybe with the serial number or the table number, something has to, because the tables which are there under each of these sections, 2, 3, 4 are again not, table is not numbered. It just says table payment to residents, table payment to non-residents, and then the third table is uh, table says the no TDS, payments on which no TDS is. So these all changes would have to be made in the ERPs where we are moving from a section to or a serial number in the table. So I think in sum and substance, while the policy wise it is the same, the architecture, the systems, the workflow, everything will have to change because it is no longer section driven. And because it is more aligned now to digital, I think the implementation or the department would be more stern now. So they will get a lot more information through different sources and from which they could, I mean, implement this law more stringently than in the past. Now coming to rules. Now the amendments, all the rules are now placed at one place. So in the rules, there are no chapters, but there all the rules are at one place, 203 to 221. So all the rules relating to TDS are between these rules. The corresponding rule number in the 1962 rules is given in this slide deck. I'm not going to each of these rules because I think what is more important is how do you read these rather than putting up the rates or what the rules really say. Because as I said, substantially there is no change in what requirements were there in the past. Now some forms have changed. The application of those forms, the filing of those forms has completely is aligned in the income tax portal. Now, coming to rules, after the rules, the forms are there. All the forms which were there now are changed. The form numbers, we will have to get used to it. Earlier, I mean, we got used to the old form numbers, but we'll have to get used to the new form numbers. As I said, there are serially now at one place, all the form numbers too. So if you look at it, I mean, application for TAN number was 49B. I mean, rest all forms were at 15, 16, 13. But this was 49B now. So it is at least at one place all the forms related to TDS provisions. And obviously there are so many forms, and this is where I feel that a better job could have been done to make life easy. The forms could have been reduced, but it still retains the old way of doing things. And there are multiple forms continue to be in the act. Yeah. So these things, I mean, I will take a pause and we can take a few questions on what is there and if you have any views.
Thank you, Pankaj, for enlightening us in a very good and lucid manner. Because the things which we have to concentrate, yes, everybody need to know. And one more thing is one small observation
Yeah.
that instead of PAN is to be quoted in case of purchase of sale of properties by NRI. That
Yes.
they have introduced, but
Yes.
that they made effective from 1st October.
Correct. So that is an
uh,
other challenge. Clearly, some of these provisions are not really applicable immediately. They have made it applicable from 1st October. Yes, very
because the pity is the government for its architecture requires time. But for our understanding, you have to understand immediately. That's why
Right.
I'm telling
yes.
that there are some sections which are applicable from 1st April. There are some sections which are applicable from 1st October that people need to be very careful. And
Yeah.
one more observation is why the difference between professional and contract? Because the what you get as the limit for contract is 30,000. That remains same.
Yeah.
Whereas for professional it is increased to 50,000. And 50,000 is the limit. That means once you cross 50,000, TDS is to be deducted.
Correct.
Whereas in case of contracts, if the bill is less than 30,000, then cumulatively it should cross 1 lakh for deduction.
Yes.
So that difference one need to know, because the subtle difference between contract and professional is professional, if it crosses 50,000, compulsory TDS is to be deducted. Whereas in the case of contracts, 30,000 is the limit per payment, and if it is less than 30,000, once it crosses 1 lakh in cumulatively, then only TDS. Like this small things, we need to enlighten ourselves. And the thing is, so many changes are coming. So we should be careful, and we should, within no time, the time elapses and we get all notices. So now the floor is open for question and answers. Now the participants can unmute themselves and ask questions. Pankaj is ready to give you answers.
And you too, sir. I will need your inputs. That's practical
I'm
input.
always there. That's why carefully, president and secretary have made me session chairman.
Yeah. And sir, and what I've noticed is, I mean, very recently, we have looked at, I've got a person had got a notice, and which was for the non-compliances, which were there as per his TDS return filed itself, which were there for the financial year 13-14.
Yes.
And when we said that it is beyond the limitation period to send a notice, when it was responded, there is a subsequent notice that this is a notice under prosecution proceedings, but not under claim of the interest, because the tax was all paid, it was delayed paid. So I mean, so that is, and there is no time limit as such provided for prosecution notice under 276.
No, it is like this. All this prosecution is covered under a CRPC Uphold Act. CRPC criminal proceedings have no time limit. Just like the payments to NRIs. NRIs, people think that if 6 years are over, 10 years are over, it is lapsed. But NRI payments are also covered under CRPC only. So even if you have not deducted for 2,000, they can come after 25 years and tell that you have not paid. So like this, department has made the draconian act. The only saving is you have to pay compounding at the rate of 8% of non-deduction per month. I am telling 8% of the tax deducted up to the date of payment, and subsequent to that 10,000 rupees as legal fees and 10,000 for withdrawing the case, dropping the proceedings. So all this compounding you need to pay, or else prosecution. And one time they are allowing.
So it's
If a person has done for 2 years, 2 years are different. One time they will allow, next year they will launch proceedings.
So yeah, really TDS provisions are, as the name is there, TDS, it is really tedious.
And one more thing is, you see, sir, some from server to everyone, everybody is allowed to open their these things, speakers, and they can put questions instead of putting in the chat box, because you can better explain. Otherwise, it will become e-assessment laga. It will become e-seminar, whatever you are writing. Mr. M. Santosh Reddy, can you unmute and ask the question? Even P.S. Narayan Garu and one Mr. Server also.
Yeah, so I'll just take up this one question which with Mr. P.S. Narayan Garu has put it on the chat box.
Yeah.
What is the TDS rent rate for rents payable to NRIs? So for all non-resident payments, right, it is rates in force. And rates is force is the on the income chargeable to tax. I mean the rent fund, it is in rates in force. So it will not have a specific rate. I mean, so whatever is taxable amount, that has to be deducted.
Defer, Mr. Pankaj.
Yeah.
The TDS rate for rent payable is at the rate of flat 30%.
No, so for residents it is less 10%.
Yeah.
For non-residents it is.
That's what.
Rates
It's 30%. 30% plus applicable surcharge and EC.
Correct. Yes.
And there is no threshold limit. From 1 rupee onwards, you need to deduct.
Yes. Right.
And second is Mr. Santosh Reddy in the IT Act 1961-94 A, C, I, J, the assessing individual, if the taxpayer is subject to tax audit. Now here the problem is, it is not the question of tax audit. It is only criteria is turnover. Turnover exceeding 1 crore. That is the trigger point, not the tax audit. Now, for tax audit is not applicable if your turnover is up to 10 crores, if you are meeting that criteria 5%. And turnover tax audit is not applicable if your turnover is up to 3 crores and you are declaring some income. So, the tax audit is not the criteria. The criteria is in the preceding previous year, whether your receipt turnover is more than 1 crore. That is the criteria. So, the similar provisions, as already Pankaj has explained in the slides, it is available in the slides also. The similar provision is continuing in the new act also. I am correct. I think.
Yes, sir.
Yeah.
Yes, sir. Actually, in fact, when this TDS came for individuals and HUFs, maybe 15 years back or something, that time it was aligned to the turnovers of the tax audit. But over period, the turnover limit for tax audits have been increased. So, but this has not changed. It has continued to be the same.
1 crore. Because in the section itself, it is clearly written, exceeding 1 crore.
Correct.
They are not telling liable to tax audit. They are telling exceeding the limit prescribed under section 44 AB. 44 AB, what it tells, once you cross 1 crore, tax audit is applicable.
Yes.
The saving sections are other things. That means if you give 8%, if you show 6%, if you show 50%, if you show like this, this is all saving sections. But main trigger is in the main section when it is applicable. Even today, the applicable is 1 crore only. So that's why once it crosses 1 crore, you are liable for tax TDS, whether you get it tax audited or you declare the required income or you comply with the provisions of 5%. Then can we take from the next question, Pankaj? Server.
Yes, sir. Jason.
That is from USA directly. US में ऐसे server से आ रहा हो. Assessee individual turnover during financial year 25-26 was 4 crores and purchased 80 lakhs exceeding 50 lakhs from one supplier during 26-27. Section 393 table 8 to applicable or not. Previously 194. Written in table as any sum exceeding 50 lakhs for purchase of goods, any person being buyer, rate 1%, 0.01%. Threshold as per note 1. As per note 1, the deduction of tax under serial 8.2 shall not apply to a transaction on which tax is deductible or collectible under any provisions of the Act. TDS provisions are applicable even turnover is 4 crore. One line answers.
Yeah. So that's correct. TDS is the threshold for I mean different sections is different. TDS, different transactions is different. And the TDS provisions are applicable once you are any entity which is other than individual and HUF, irrespective of turnover, it is applicable. And if it is an individual and a HUF, then the limits are 50 lakhs and 1 crore, depending on the profession or business income.
Hope,
Sorry,
yes.
one second, sir, Chairman, sir. Pankaj, if you can take out sharing, I think you can look at the principal.
Okay, sorry.
Yeah.
So,
Um,
hope this clarifies your query, server. If any further is there, you can unmute and ask. Otherwise, I will go to next question. Then Vinod Kumar Mittal is asking, a person was NRI for assessment year 25-26, but he was resident during assessment year 26-27. He sold property in the month of April. He is likely to go out of India, but it's not sure when he will go out of India. If he goes out of India after 60 days, but question is, in the month of April, he is not sure he will be NRI or resident for tax. How he will deduct TDS as a NRI or resident?
So I think this case, clearly he was an NRI in the prior year. And this year he has not become a resident because he's not spent 60 days. So still, I think he satisfies those conditions of becoming a resident, he'll be considered as an NRI only. So if he satisfies the conditions of being 60 days in this year and prior 365 days, then he may become a resident, or 182 days if he exceeds. Till he becomes a resident, he will be considered as a non-resident only.
Any other question? The questions are over. If any other question is there, you can unmute and ask. In the meantime, I will share a joke because new act has come and old act is also there. It gets me reminded of a small anecdote. మనకు ఇంట్లో చాకలి అయితే వాషర్ మ్యాన్ ఉంటారు కదా, అతను బట్టలు తీసుకొచ్చాడు. దట్ మీన్స్ హీ బ్రాట్ ది క్లోత్స్ ఆఫ్టర్ ఐరనింగ్. My wife found that one shirt is missing. What happened, sir? Madam, it is lost. Somebody have given it to some other person. Okay, it happens. My missus has pardoned. But she saw that the charges are made for that shirt also, ironing charges. Then she asked, you lost the shirt and you are charging for the ironing. He is telling, sir, madam, that shirt was lost after ironing. That's why I'm charging. But are we charging? Even after doing work, we are not charging. Now TDS, so many changes are happening, so many complaints are there. We should also start charging. Then only client will know. So now I'm open for questions. Mr. Santosh Reddy has asked one more question. Limitation to reopen cases, reassessment changed from September 2024 as 3 years, 5 years from the end of assessment year. Doubt is whether for period pertaining to earlier September 20, 3 or 10 years continues. You want income tax or TDS? What is this? Is asking question. This is regarding income tax or TDS. Mr. M. Santosh Reddy garu, can you unmute and ask? We are not able to understand your question. Limitation to reopen cases, reassessment changed from September 24 as 3 years and 5 years from the end of an assessment year. Doubt is whether for period pertains to earlier of 2024, 3 or 10 years continuous. I think it is for income tax. Yeah. Reassessment is asking. 148. Today we are speaking about TDS only. Then it will be a separate session. Secretary sir, please note down. People are having doubts on this point. So reassessment ka ek bana lo. Our Ramdev Buttada sir will give all his experience in that. So next, if any other question is not there, we will close it then.
Sir, I just want to share the act because someone has pinged me that act, how is it in the table? So if you permit, I'll just share the act.
It's the floor is open. No, as long as you are ready, we are ready to receive knowledge transfer.
Yeah. So I'm just sharing the screen. So if you're able to see the screen.
Yeah.
So this is the act. You have the tables in the act. in this format, like payments to, this is under subsection 2 of 393, payments to residents. So table is not mentioned, table number is there, nothing is there, just says table. And then you have the serial number where, and then above when it is written, it says refer to column A, B, C, D. A is serial number, nature of income, payer, and the rate with the threshold. So both are at one column only. So the interesting thing is that these are all listed here, and you will have notes in below the provisions. Now the notes are there, which again have to be referred to, and the notes is not cross-referenced at the top. So, and I mean, at this place there is only one note, but at some places there are more than one note. So you will have to see which note, I mean, which reference. So note like the without that serial number, there was one note. Now there is 3 notes below this serial number. So this is again a little confusing way of putting up things. Now you see this note doesn't have any number itself. It is below a thing which doesn't have any number. And you look at it, it's again a lot of cross-referencing is there, because one of the challenges which was mentioned when the new bill was introduced, when the new act was announced, was that the current act has become, I mean, difficult to read. So it is not that this new act is very lucid or very easy to read. So it is again referring to sections, 2 to 3 sections in, I mean, serial number sections. So those references are still continuing. And then when you read this whole section, I mean, the whole table, and when you have to still would have to go to the no deduction table also, which is there under subsection 4, because some thresholds are coming there. So this is for no deduction at source. So if you look at it, some thresholds are coming in this provisions. I mean, I've noticed it for the virtual digital assets. The threshold is coming in this table and not in the earlier table where it has to come. So you see here certain thresholds are there.
This
So-
will get used to it.
Sorry, sir?
This will get used to it because we
Yeah.
have seen that also. So
Yeah.
now all at one place. So only 3 tables, we should be careful. Over a
Correct.
period of time, it will get adjusted to this.
Yes, yes.
Uh,
And in fact, I looked at the Reckoner, and thankfully in the Reckoner, wherever he has, I mean, he has reproduced the table 1, assuming I'm calling payment to residents as table 1. He's put a column, and he's given the exemptions as a notes. So he's cross-referenced it, and wherever they are there, he's given it as a note. So at least you will know that there is an exemption for this particular payment and come back. I mean, you can look at this exemption.
yes, we will share the PPT, Rohit sir. And one more thing is most of the people where they are missing is there is a clarification last finance act they have given that in the case of sale of property, previously the property value is exceeding 50 lakhs, and if there are more than one seller, there is no liability because each person's share is less than 50 lakhs. But they have removed that. Now more than 50 lakhs, if the document value is more than 50 lakhs, then compulsory you need to deduct even if they are 10 sellers also. So that a person need to, the document value is the criteria, not the number of buyers or sellers. That I wanted to clarify. So you see what Vinod Kumar sir is doing, can we apply Newton online or through facility center? Both are provided. Are they not provided? Newton online or through field station center, facilitation center. I think online also you can do, and facilitation center also it is there. Probably transitional period, so the facilitation centers are not yet ready because the software, everything they need to change it. But online, I think we can apply. Any other questions? If no questions, then we'll. I will
I'll
hand
just-
over.
Yeah, I'll just give my closing
Yeah,
comment.
please.
Yeah. So, I mean, I think I mean, though the new act has come and everything, I think we cannot forget the old law, because the substance is the same. So we will have to continue living with the old law. But what we have to look is, we have to look at the old section. We have to remember the old sections, but then we will have to correlate them with the new serial numbers in the tables. So that is what we will have to correlate. And then we will also have to look at what are the carve outs and what are the, I mean, lower withholding options which are there in the another section. So we will have to live with the old law for some more period of time, but have to correlate with the new serial numbers in the table, tabular format, and we will have to look at the carve outs. So we'll have to be aware of all these things if really we are practicing in the direct access TDS this thing.
Because there should be clarity, old act and new act.
Yeah.
And the only thing is it takes some time because you have to live with both the acts.
Yeah.
It reminds me of a small anecdote. One person came and rang the bell, it seems. The one small child came. He was asking, is your dad inside? Dad is there. My dad went to evening walking. Then please call your mother. My mother went to kitty party, he told. Then call your brother. My brother went to play cricket. Then why are you dying in the house? You would have gone outside. Then he told, I came to my friend's house. So he is also outside only. The same thing will happen. If you are not having clarity, then both acts we will get confused. So we should be very careful at least for 2-3 years, because where old act appears, the notices will be receiving. Because our olden days, we know when we are physically appearing, giving the statements, submitting the documents before the assessing officer, ITO 10-1 रहता, ACIT 10-1 रहता. अपने बच्चे क्या टाइप करते हैं? ITO 10-1 को ACIT 10-1 को ITO 10-1 बोल के ही दे देते हैं. Then ACIT used to get angry. I am a ACIT. How can you type me as ITO? So like the small subtle changes we need to concentrate, and we should concentrate on that. And our chartered accountants or other professionals are well versed, because having seen the extreme, now it is at least it's a polished manner.
Yeah. Rate continue to be the same. That's again a good thing.
Sir, you are most welcome, sir. आपको always the floor is open.
Thank you.
Gems of wisdom आपके मुंह से सुनना हम.
Yo.
So there is
Thank
a
you.
question. Sir, there is a question also. Is there
Hmm.
any change in certain government bodies which are excluded from TDS purview?
I have not observed anything, but there's nothing like that.
Yes, I also, I think there is nothing new. What is there in the old is continuing. So what was earlier the bodies which were exempt from TDS provisions continue to be exempt, except for, as I said, for 194C designated person, the payer has to be a designated person, which includes a lot of government bodies.
Sir, Ramdev ji.
Yes. Just one thing I wanted to share with you. We are claiming deductions under section 54, 54F, etc. based on some certain conditions. After this act is being repealed, 1961, if that condition is not fulfilled in the subsequent year, how its treatment will be, whether in the old act or in the new act?
So I think, sir, Samamurthy sir, are you giving your views?
नहीं मैं अभी कुछ पढ़ रहा था इधर, तो I have not considered. Just
Okay, sir, I think, sir, I think because from this assessment year, it is, or this tax year, no longer assessment year or any financial year. From this tax year onwards, if it is there, it will be taxable on the new act only.
Yeah.
If the old year, if it gets taxed on the old year, then yes, obviously the old act.
सिंपल सर्विस कुछ कंफ्यूज होने का इस नहीं. एक ही कंफ्यूजन क्या है बोल तो लास्ट फाइनेंशियल ईयर का ये असेसमेंट ईयर बोलते हैं, मगर दिस इज नो असेसमेंट ईयर नाउ, दिस इज टैक्स ईयर ओनली.
No, not like that.
And one more thing is, whatever is due last year or paid last year, they are taxable as per old act, and whatever are due are paid this year, whichever is earlier, are taxed in this year. That's all.
No, Samba, my
Ah.
question was something different.
Ka-
Suppose for assessment year 26-27, in which Income Tax Act 1961 applies,
yeah.
I have sold some property and capital gains and deposited in capital gain deposit scheme. With
Okay.
the condition that within 3 years I have to construct or 2 years I have to purchase the property for claiming the exemption.
Yeah.
Subsequently, that condition was not fulfilled or it is not complied with.
Done.
How its treatment will be in the subsequent year, either as per 1961 Act or as per 2025 Act.
It is like this, sir. 1961 में जो provisions है, वो when he fails to comply, it will be taxed as per the 1961 provisions only. Transitional
No,
provisions लगा है ना?
No,
नहीं.
you just go to section 536 of 2025 Act, which
क्या
is a
बोल रहा?
repeal section. It says that it will be taxed in the year when that violation has occurred as per the new Act.
Okay.
So we have to be very careful.
Hmm.
Section
Until there is
536.
any change, there I don't think any this thing.
I think Pankaj can throw some light on it.
No, I am also reading, so the repeal and savings is a large section.
अभी एक साल होता सब एक्सपर्ट ये सब करने को. ये विनोद कुमार जी बोल रहे हैं कि we have received summon under new act for assessment year 22-23. It cannot be. नहीं उनको मालूम नहीं है अभी. It's not necessary that a department officer should know everything. और by mistake भी वो सॉफ्टवेयर में the trigger कर probably he might have given under the new these things. वो सॉफ्टवेयर भी वो भी कंफ्यूज होता है ना, ओल्ड एक्ट न्यू एक्ट. अभी हमारे को नोटिस आते थे 3:30 AM बोल के. वी यूज्ड टू गेट हम वंडर, अरे 3:30 AM को कैसा जाते डिपार्टमेंट को बोल के. वो PM AM रहता ना, AM काटने का PM काट देता था. हमारा नोटिस आता 3:30 AM, बट वी यूज्ड टू गो एट 3:30 PM ओनली.
No, one thing, Samba, here I would like to share.
Hmm.
In the same section 536, which is a repealing section, it has been mentioned that any action due to be initiated relating to any year prior to 1/4/2026 will be dealt with as per the 1961 Act. Action to be initiated.
That's right. So the taxation will be, there will be transitional in the provisions in the form also, sir. Old act में tax क्या है, new act में क्या tax है. All these things they need to take care. Now those forms, Infosys person has to understand and give a proper form so that the experimentation on CS will at least stop now. Previously in our olden days, in our 7th class, 8th class, we studied that scientists do experiments on rabbits and rats. Now chartered accountants have been experimented by department and Infosys people. Now we need to understand and we have to escalate the matter. They have to understand, they have to change. Even today, that 154 petition has got lot of lacuna. Only 3 options are given: reprocess the return, change the correct the TDS details. Third is file a revised XML. There will be other points also. There should be one more, any other point which we can explain. That is not there, that they are not rectifying in spite of lot of requests and grievances also. So anything else, sir, or else we will close.
One thing, last one thing, my suggestion, humble suggestion to our president is that we are coming out with our directory. We are engaging printer for that also. So if we could print a chart, table chart in a simplified way relating to TDS, TCS, along with the exemption applicable for 26-27 tax year and subsequent years, and circulate amongst member, it will be very helpful. As a reference.
President sir, kindly take note.
Sure, sir. Sure.
पंकज जी क्लोज करेंगे.
Yes, sir. Thank you so much, sir.
Thank you.
Sir. Chairman, sir. One question. I think somebody was putting, someone's issued as per the new act. When an officer is working in April, definitely will follow new act only, no?
No, that is correct. We will work But
Maybe
if now
matter comes for previous years, he may initiate the proceedings of as per the old act.
old
But
act only he has to initiate, but the new act is for new provisions, new act. New whatever notice under old act, he has to give old notices only, not new notices. He has to work under both, like just like us. We have to keep two income tax acts.
so he has to give both the notices. Huh?
Yeah. No, one notice only, old act. Is anybody speaking? Is anybody speaking? ఫోన్ ఈశ్వరన్ గారా మాట్లాడేది? కొంచెం చెప్పండి సార్. యువర్ ఆడియో ఇస్ నాట్ క్లియర్ సార్. కొంచెం వెనకకి వెళ్ళి మాట్లాడండి. వెనక కూర్చోండి. ఇప్పుడు మాట్లాడండి.
Sir, उनको he has to leave the meeting.
Hello, good afternoon. Are you able to hear me? Hello,
చెప్పండి.
మీరు చెప్పింది నేను ఓకే అన్నాను అంతే. I concur with you. That's all.
థ్యాంక్ యూ ద సెక్రటరీ సార్. vote of thanks.
Yeah, thank you, sir. Before moving to vote of thanks, I request our President CA Vimla Chandrasekhar Garu to give the closing remarks.
Yeah, very good afternoon once again. Thank you, Pankaj Bhai, for the wonderful session. You've given very detailed presentation in terms of changes, highlights. Of course, every chartered accountant has to sit on his own working pertaining to the applicable sections, his clientele categories, and he has to make again his own presentation to his clients. Then only he will do justice. And I'm sure, as Chairman Sir said, any challenge, first challenge will come to CS only. During demonetization, challenge to CS. GST, challenge to CS. And now Income Tax Act. Sir, we're all, say of course, person like Ash is fine because he's an youngster. Again, we have to read 3 years. Like without any certificate, we have to do a course, CA course without any certificate now. It's okay. We need to face the challenges. That is what, how Pankaj Bhai adaptability. Now today, how he presented, he is his presenter. I'm sure he's like sitting in space, not in Zoom. So like that, every CA has to change to the circumstances. So that adaptability should be there. So thank you all for participating this wonderful sessions. We will do many more like these Zoom sessions in the month of May. Maybe we're planning, there is an idea which we need to discuss in GC, a week-long program we wanted to conduct over Zoom on different topics with, as Ramdevji was mentioning that we have many experts in our tax bar, it seems. So with all those, we will try to do different, maybe a week-long Zoom program we will do. So thanks for all the cooperation. So keep waiting for future programs. Thank you very much. Thank you, Pankaj Bhai, once again. And Sammati sir, thank you very much. సార్ ఇట్లనే మీరు ఒప్పుకోండి సార్, మేము అడిగినప్పుడు ఒప్పుకోండి సార్.
ఒక చిన్న జోక్ గుర్తుకొచ్చింది మీరు మాట్లాడుతూ ఉంటే.
చెప్పండి సార్.
One question was asked to a student, who is a doctor? A doctor is a person who kills all ills with his pills and later with his bills, bola.
But anyhow, but CA ka chance లేదు సార్, బిల్లు లేదు.
అదే వీల్ కిల్ ఆల్ ది ఇల్స్, నోటీసెస్ సంగతి రిట్రైన్ చేస్తాము, అంతా చేస్తాం అనే ఒక నాలెడ్జ్ అంతా పెట్టుకోవాలి. తర్వాత
వితౌట్ బిల్ అదే
వితౌట్ బిల్
we'll get the bill only when we
2 acts ఉన్నాయి, 2 బిల్స్ వస్తాయి.
the client will kill us. We have to run behind
with his will.
Yes.
Thank you, Pankaj Bhai. Thank you, Samodhi sir.
Thank you, Pankaj ji. It was a fantabulous presentation. Excellent. Great.
Thank you so much.
Thank you, Pankaj ji.
Thank
Thank you, Pankaj ji.
Thank
Thanks,
you.
sir. Bye-bye.
Okay,
Sir, we'll be
Pankaj
sharing
ji,
PPT, Pankaj bhai.
Samba garu.
Yeah, I will
Thank
share
you.
it across. Just after the yeah.
Yeah. Over
Thank
to
you.
Secretary, sir. For
Yeah.
vote of thanks.
Yeah. Good evening to everyone. As we come to the conclusion of today's insightful and enriching webinar, it is my privilege to propose the vote of thanks. First and foremost, I would like to express our sincere gratitude to our distinguished speaker, CA Pankaj Sancheti, for delivering such an enlightening and comprehensive session on the topic TDS provisions under the new Income Tax Act. Pankaj bhai, with your deep knowledge of the subject, clarity in explaining the provisions and practical insights shared today have greatly benefited all the participants. We are truly thankful for your valuable time and efforts in addressing our members. I would also like to place on record our special thanks to the chairman of today's session, CAP Samamurthy Garu, for gracefully chairing the session and guiding the proceedings. Sir, your presence and moderation added great value to today's program. I also extend my gratitude to our past presidents, advisor, all the governing council members for continued guidance and support to the activities of the association. Finally, I extend my heartfelt thanks to all the members and participants of the tax fraternity who have taken time from their busy professional schedules to attend this webinar and make it a success. Your enthusiastic participation motivates us to continue organizing more such professional programs in the future. With this, we conclude today's session. Thank you all for joining. Have a wonderful evening.
Just I want to have a final announcement to all the chartered accountants. Now this is April and May. Institute is conducting so many professional development CP programs. I request you to register 3 days GST SESTAT. They are organizing 3 days program and 2 days program for the DAX committee. So totally around 30 to 40 hours in just a single month when we are free. If we can complete that 40 hours criteria, we need not die at the end in December. My request to all is just register for even on May 2nd, they have organized some program of 6 hours. So 18 plus 6, 24 plus 12, 36 hours in just 1 month in our unseason time. And knowledge development also. All our topics on all relevant topics only, which will enhance our professional skills. My request to all chartered accountants and to you put in a word to your all fellow chartered accountant, friend chartered accountant, relative chartered accountants, and see